Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Friday, January 28th, 2022. Holy rally underway here, folks. And again, beautiful to see some of these beaten down tech stocks making moves. S&P 500 right now up 2.2%. NASDAQ 100, here's the NASDAQ 100 chart, and you can see that up almost 3% on the day. So again, the Fed tried to spook things. Well, they didn't try, but ultimately, they spooked things on Wednesday, but the markets never took out that recent low. Remember how I talked about you could trade against the recent low? Well, there you have it, folks. This morning, we sold off down here. We came down to 337.70 or so. The low was around 334. Obviously, we saw a massive reversal. Markets are screaming into the close. They close in about 3 minutes. So what a move here, folks, to the upside. NASDAQ 100 pushing up. And again, if I'm correct on what I've been saying and what I've been buying, we should make good money early next week on a lot of these positions. And again, take a look at stocks like SE, right? So I added to that again yesterday, and look at that. It touched $120. It's back to $137, up about 7% here. NET having a nice day, up about 5%. Take a look at Affirm, AFRM, folks. That is up 17%. And look at the move, 17%, and look at the still how much downside it's had. This is what I love to see. This is why I love to bottom fish at key technical levels. Again, this is why we pick up small positions intermittently at key technical points, because when the bounce comes, the bounce comes. And again, beautiful move just like that. And what's amazing is at the current price of Affirm, we're now in the money on Affirm. And again, now let's see if it can make a little bit of a move over the next couple days into next week, and maybe we can bank some serious capital on something like Affirm. Nvidia's up $8 on the day. Yesterday we bought Pinduoduo up $2.12 currently. So again, rally central. Even Alibaba up 3.25. Baidu's up 2.5. It is just a all-out buy the dip. Big money rotating in. And again, I said it to you guys yesterday. I said Apple was going to be the key, right? Apple today, look at that move on Apple, trading at $170. Big move up. That's almost a 7% move on Apple, folks. That is nothing to sneeze at. That is an epically big move on that stock. All right. Again, let's flip over to the intraday, and we're going to talk a little bit about how things played out throughout the intraday on the market. We're going to go to the spiders here. So the spiders early in the day, again, you can see right here, right? So we opened the day right here. And again, actually, check that. We opened it right over here, right? And we started the day just chopping around. We had a little bit of a sell-off. Early in the day, the markets were trading down. We showed you that on the daily chart just a minute ago. We then started to see a little up, a little pullback, and then the upside came within 1, 2, 3, 4, 5 into 6 bars, making the high. Bullish consolidation, end-of-day squeeze. Shorts are exiting here. And again, look at this market. Highs of the day continuing to push up and just rocket to the upside. So again, flipping over to the daily chart here, look at that move up again, 2.4% now on the SPY. If I zoom out on the SPY, remember, this is the market, this is the chart that I've shown you guys, right? So long-term trend, market gets steroidal push from the Federal Reserve. It goes vertical. We then break down, which makes sense as the Fed pulls out the liquidity, right? Starts to retract the stimulus from the market. You come down, you hit some key supports right here. You're getting a technical bounce. Is it possible we could go back up here? Yeah, it is. Again, that might be the long shot. That's the max upside I see. But certainly that is a potential move there that we could see. So again, keep an eye on that. That would be your max upside, which is around 460. Still, again, we're at 442 right now, right? So again, we're still quite a ways away from that. Markets have just closed, by the way. And again, really remarkable move to the upside, about almost 2.5% on the S&P 500 here. But again, this shouldn't surprise you. There was a lot of bearishness out there. There was a lot of bearishness in crypto, which is one of the reasons why I've been buying different cryptocurrencies recently as well. And again, surge to the upside today. Good to see. I like the fact that we closed strong today. We'll see if we get a pause day on Monday, maybe a small pullback, or do we see follow through to the upside? Certainly the move up is going to coax in by the dippers, thinking that a bottom is in and that the markets are going to go back to all-time highs. I do not see it that way. I want to be clear on that. I do not see it that way. Do I think we're going to continue to bounce? Yes. I wouldn't have the long positions I do without thinking that way. But at the same time, I think that, again, max upside's back to this kind of range right here. Again, we talked about 460 as your max upside. And by the way, it may not get there. You're going to have resistance right here. In fact, let me just draw a quick trend line for you guys so you can see that. So this is going to be your first major resistance right here, right? Pivot low and pivot low. So here's a point. Here's a point. That's going to be your first resistance at 450. If you get through 450, then you could potentially retest this upsloping trend line, which would be a retrace to the scene of the crime. That would be the next point. Again, this would be my max upside here on any sort of bounce. On the downside, continue to monitor this downside level here. This is, again, your major technical support with this low. As long as that low holds, then the market technically has a bottom. All right, my guess is it holds for a few weeks, and then we see more selling pressure. All right, so again, that gives you a good basis to go off of for the S&P or the spiders here. Let's go to the QQQ chart here on a daily basis. Again, take a look at this level here, monster support level hit. Again, we are seeing an epically big move here, about 3, actually ended up 3%, 3.17% on the NASDAQ. That is a big move on the Qs there. In terms of upside, we are technically into a little minor support. This is only minor right here because we already hit that a couple days ago with this candle, but you can see right here today we closed right at it. I do think we go through that. Where would your next resistance level be? Let me see here. Your next resistance level is going to be right around 370. So you can see this little pivot low right here. That's going to give you a little bit of resistance. The max upside I'm seeing on the Qs is right here. Pivot low, pivot low. That would be my max upside on the Qs. Now, again, that's still $30 more. I don't know if we're going to get that, to be honest. I likely will have unloaded quite a few of our long positions by the time we even get close to that. Even by this level, honestly, I'm going to be unloading a lot, taking a lot off the table, because inevitably I think we're going far, far lower to the downside. But in the near term, yeah, still should see some upside. Doesn't mean we won't have a down day on Monday. You could have a pause day, a small down day. But the key is, what you wouldn't want to see is you wouldn't want to see a reversal day. You don't want to see a day where you gain 3% on the NASDAQ and then drop 3% Monday. If you drop 1%, no big deal. 1%, it's a 1/3 retrace, not a big deal there. All right, you don't want to see a full reversal. That would be very, very bearish. Okay? All right, so again, we've got the levels here. Let's look at the Russell, the IWM. And again, we do have our IWM long play, which is the TNA. I can quickly bring up that chart, and you can see the TNA closing at $56.12, so nice little move there. But let's flip back to the Russell here, which is more accurate for analysis. And you could clearly see, it's basically, this is the obvious level, right? So I'm going to show you exactly where the Russell should go back to. Let me get rid of those trend lines here. Those are the old ones. See this area right here? This is it. And this is where you're going to go back to. So you still have upside to about 210, I would guess. You will have a little resistance to this previous pivot high right here, which was around 204 to 203. So again, you're at 195, we'll call it. Upside, you should get at least back to 203, 204 on the IWM. Upside following that, I would say your max is 210. All right, 210, I pulled the trigger on a short very likely on this, and for sure we would be out of the TNA long before you even get close to that. Well, maybe not long before, but probably, somewhere on a pierce of this level to here, we want to take that profit and run because, again, you're on borrowed time. If I thought the markets were going back to all-time highs, I'd say, hey, guys, just sit back and hold. But I don't think that. All right? Again, there's something different now, right? You could argue that it was crazy to short the market, and even though I did it plenty, and we did relatively or very well on it when we took key positions, with a few losers along the way, but you could argue that it was crazy to try to fight the Fed on the way up. Well, now the Fed's going the other way, so you could arguably say it's crazy to fight the Fed when they're taking liquidity out of the market. Now, inevitably, I think that they'll have to start putting it back in once they weaken the economy because of trying to get inflation under control, and that's going to be what's going to be so interesting to me. At what level, what's their middle ground? Are they okay with 4% inflation and then stopping the tightening with the economy and unemployment at 6%? Like, what's going to be the kind of trigger here? And also, we know that the Fed is very emotional. All right, we know that because they were so insistent it was going to be transitory. Then they said no. Now they're overreacting, saying tapering, rate hikes, and balance sheet reduction. Right? I mean, they're overreacting in the other side. So they're no better than an average investor. I would say that they do have additional information that none of us have. But in terms of emotion, they are no better than an average investor, right? Which is why they overreacted in stimulus to save the day, freaking out, and now they're overreacting to freaking out that, inflation is going to be out of control. All right, so that's where we stand on this front here, folks. Let me just see what else we have on the radar. Why don't we flip over to Bitcoin here? Now, Bitcoin's showing some signs of life too, folks. So, with the market, and again, risk-on environment is a Bitcoin and cryptocurrency positive, right? We know that. I've said that to you guys many times. It trades, basically, Bitcoin and cryptocurrencies trade with high-risk tech stocks like a Tesla or some of the smaller ones like an SE or an NET or an Affirm, all right? So, again, keep that in mind. But again, risk on is now pushing crypto up 37,718. So very interesting here. If we go to the intraday chart, look at the market. All right. So again, let me flip back to the spiders. All right. Look at this move up here on the spiders, right? This is the 15-minute chart. So the last hour and a half, right? These last multiple green candles. And then if you flip over to Bitcoin, boom, same thing. All right, so again, just understand the correlation at this point. Now, again, in 10 years, do I think it's going to be the same correlated? No, I think crypto will be more like a gold type situation. But right now, it is 100%, correlated to the tech stocks and the highest risk tech stocks at that. Okay, so again, Bitcoin, nice little move here. I'm still in the camp, and I said this since it hit this low range. I came out in every way, shape, and form and said this was a short-term bottom in Bitcoin, only a short term, but certainly I've been saying going north of 40,000. I still think that. The question is, do we get there by this weekend or is it next week? But I still think you're going north of 40,000. First resistance will be 40,000 right here. You can see this little pivot low area. Then you have 42,000, 44 and a half, and basically 45.75 to 46,000 right here. I think your max upside for me is probably 46,000 on Bitcoin. That would be kind of the max bullish case for Bitcoin on the bounce, which still would be tremendous. Like if you think about it, 33,000 low to 46,000 is an incredible move. I mean, in all fairness, 33,000 to 37.7 is pretty solid too. But I still, again, think you still have more money. I mean, if you look to charts, let's go to the SE chart here. I mean, you just look at that chart, right? So this in November, this was trading at $365. It just bottomed out today in basically 2 months, 3 months, right in there, right, at $120. I mean, with no major bounces, right? No major bounces. Yeah, you had a day or two, 1 day, here's 2 days, but that's it. 3 months of downside with no more than a 2-day bounce. So what I'm saying here is that inevitably, you should see this. I mean, first resistance, there's a gap fill at 155 or so here. But honestly, would I be surprised if this got back to 200? No, I wouldn't be. Not one bit. And the same thing with Affirm. I mean, Affirm, going back to early November, look at that topping tail on a technical basis, though. That's a beautiful thing. But look at the drop from $176 down to $50. Now it's back to about, in the after hours, it's actually $60.72, which is nice to see. Hopefully we get some good follow-through on Monday and continue to see upside. But again, when you have those type of drops, the snapbacks are very big. In fact, on SE and NET and Affirm and some of these really beaten down names, I wouldn't be surprised if the selling pressure in the last week was a compilation of not only small investors panicking and dumping, which is always a bullish sign, but also some hedge funds that were over-levered and ultimately went bust. I mean, literally blew up, meaning that they were over-levered. These drops just wiped them the heck out. All right, now I wouldn't be surprised if in the next 2 weeks we actually hear about it on CNBC, about this hedge fund that blew up or that one. And you know what's, these type of moves are very reminiscent of the de-risking that went on in stuff like Viacom, right? I mean, if you go back on Viacom here, let me punch that in again and zoom out. But you have these type of, look at the run here and then look at the SE run. Now this, look at this just vertical nonstop move on SE, right? or NET. I mean, NET is a great one, like this right here, right? And then look at the collapse down. So obviously, this is multiple selling pressures with multiple funds, probably, right? To me, that's probably not just one. In Viacom's situation, it was just one, right? And that's why it was so steep, because they had to delever in basically a very short amount of time, and it was such a big position. My guess is the funds that delevered in this one didn't have quite as big positions, but the drop was just so massive that, if you're 2-to-1 margin and some of these stocks are dropping by 50%, 60, 70%, you're done. That's it. You're done. Crazy, man. And I still can't believe that. And this is just not to gripe and rip, certain professions, but the analysts, like, what the hell, man? I mean, this just shows you how I just don't trust analysts, because they were upgrading stocks and up here and raising price targets. All right. Now it's down here, and I think I saw like SE got a new price target lowered to like $285 or something like that. It's like, so you wait till it drops to 120, and then you lower your price target from what, 350 or 500 to 285. And by the way, 285 is fine by me with our entry price, right? I mean, we're at right now you're trading at $136. Sure, 285 sounds awesome to me. I'll take that in a heartbeat. All right. Anyways, you guys get my drift on that one. So Bitcoin, again, getting a little bit of a bounce. Gold, on the other hand, continues to be under a little bit of pressure here. Not a huge down day on gold, but again, look at the symmetry. Look at the beauty of this chart, right? The wedge pattern, you hit again this high level. Now you're trading back down here. It is just picture perfect in terms of a wedge pattern. So again, tip your cap to charts. They just continue to just amaze me, and I've done this for 20 plus years. But again, look at how it's just holding in this wedge pattern. I still think the breakout is coming. I will likely, remember, we took Newmont Mining off the table for a nice gain recently. I would definitely be eyeing it if it pulls back a little bit more. If we go to Newmont Mining, it has pulled back reasonably, but this would be, so right here would be my spot, right around $58. So let's see if we get a little bit more downside. There is a lot of support where it currently made a low today here, but I'd like to see a little bit more downside here on that, and we'll continue to watch it. Next on silver, we're actually going to look at spot silver here. Silver, again, a down day. What's fascinating about silver here is, check this out. So basically you connect these lows right here, and look at that. So you got a short-term little support area right there you just hit. You did a retrace on. Again, I was very close to buying some silver, some long silver today via SLV. I didn't pull the trigger on it, but again, it is on my radar. My one caveat, again, is that you have this level here, and I just continue to kind of think around the 19 level could be where we're headed. So just be aware of that. There's still a chance of us going to 19. Now, if we get down a little bit lower and we start a small position in silver, we can always add at 19, easily. But, let's just kind of play it by ear. I'm still kind of eyeing it. I was interested today in the short term for a bounce, but again, the question is it a longer term low? Is the Fed, again, raising rates and being so hawkish going to hurt the economy? Yes, I do think so. Will that hurt short-term demand for silver? Yeah, probably, even though it's a safety play too. So it's a little trickier than just a pure gold play, as I've said to you guys. All right, lastly, let's take a look at WTI, folks. And again, just a beautiful kind of WTI chart here. And you can see oil basically ended flat on the day. Now, you're starting to get these tails, which tell us there's short-term resistance here. Again, I drew the comparison, I think I mentioned this to you guys even, about the monthly chart. If you go back to 2008, how the stock market topped, and then it was really about 6 months later that oil topped, and then oil absolutely crashed, and it actually caught up to the market and bottomed when the stock market bottomed in 2009 March. So my guess is that same thing is going on here, which could mean there's still a little bit more upside in oil, even if you get a short-term pullback here. So just keep that on your radar, even though a collapse is, to me, imminent. It is going to come. It just could be a little ways away. But when that collapse comes, you're going to see oil go down. My guess is easily sub 50 and very likely $30. You could see $30 crude very, very easily. And again, what's remarkable about that in terms of oil is that, let me just put up WTI again here. We'll look at this one here, is that, if you think about it, remember, oil was basically, flat to negative at one point. So if you talk about a retrace, number one, there's going to be a lot of support here, but, you could easily go back to 43 here and even down to the 33 level, right down 35-ish area here, and you still wouldn't even be retracing. I mean, you could do some fib retraces here. What's a 618 retrace? Probably right around here, I would guess, as well. Those are all potential ways to figure out what a collapse or reversal could be. But yeah, I mean, just kind of crazy stuff to look at the symmetry and how it is coordinated and playing out precisely how 2008, 2009 played out. Some really fascinating stuff. All right. On that note, guys, have a wonderful, wonderful rest of your day. I tip my cap to you guys. Have a great weekend. Look forward to seeing what the market has in store for us next week. Take care.